Hello, investors. It's Don Vandenbord, Senior Portfolio Manager with Revere Asset Management. Today is Thursday, April 6th. Feels like a Friday, though. It is 5:08 p.m. Eastern Time, and I'm coming to you from St. Augustine Beach, Florida, with the one-day early big show, the end of the week edition of the Revere Market Insight video, where we take a look back at the prior week, take a look ahead at what's important for next week, and update the world famous 21 over 21 leaders list. Let's dive right into it. Market state, we're in an uptrend. You really got to watch what you're investing in, though. We're recommending currently excluding industrials, financials, and real estate, as these sectors are being hit either with a combination of what's going on with the banks, uh, which is fallout from the liquidity issue with banks, and also recession, as all economic data coming in recently has been slowing below expectations, and certainly pointing to a looming recession. How difficult it's going to be, we don't know, but we did see some absolute rotation into recession-proof sectors and out of recession-susceptible sectors this week. That's why this is called the recession rotation edition. So, trend of the market. Let's check leaders. They're still on bullish, mainly because a bunch of them bounced where they needed to today, along with the indexes. We saw quite a few undercuts and reclaim of the 21-day moving average. So we're showing bullish with the yellow sub arrow pointing toward neutral. We had 7 drop off. That's an abnormally high number, and that's indicative of the rotation that went on this week. Short term, all 5 of the major indexes, well, 5 of them are above their, 3 of them are above, the 3 big cap indexes are above their short term 21-day moving average. Clear bifurcation, not only among sectors, but also among market cap too, with the S&P, the Dow, and the NASDAQ above their respective short-term 21, medium-term 50-day, and long-term 200-day moving average, and the mid and small cap indexes below all 3. So let's get into what just happened today. Started off with a gap down, more negative economic data pre-market, but the S&P and the NASDAQ bounced right where they needed to at key support. Leaders survived, didn't thrive, but they survived. They're glad to see the weekend, and we'll look forward to what the behavior is next week in the overall market. Here are the final numbers for this Thursday that feels like a Friday. Market obviously closed for Good Friday, so enjoy your 3-day weekend. RG7, this is the 7 growth ETF composite that we track in-house, and this has really done its job, especially this week, telling us, keeping its finger on the pulse of the market as far as mid and small cap and smaller large cap growth stocks. It lagged on the day and it lagged on the week, up 0.13%, S&P 500 up 0.36, NASDAQ 100 started out the weakest of the indexes, closed the strongest as money flowed strongly into the big core 7 names as the day went along. Dow basically flat, mid caps down 0.18, Russell on the positive side 0.13, global diversified 60/40, stock and bond up 0.22%, in-house GROTECTION we were positive 0.24%. We'll go through the tail of the tape in the updated 21 over 21 list. Let's dive right into the key indexes that we review at the beginning of each video, the 5 major indexes, and then we hit the key inter-asset correlation indexes. So here's your S&P 500. After making highs last week and Monday, gentle 2-day pullback, a lot of rotation going on under the surface of these 2 days, though. This is why we check under the hood at Revere. We're the service department for your portfolio. We're not the salespeople that just stick you in a pie chart and tell you to think long term. We want to know what's really going on in the market. And then today with the gap down right into the uptrending short, ultra short term ADMA. We bounced nicely there. Let's go to the 5-minute chart, and you can see the gap down here held at 40.70. This is a big support area between 40.70 and 40.80. Nice bounce, tried to come back again, and it held. So we didn't make a lower low, and then we made a higher high. That puts bulls in charge, at least for the day. We continued to trend higher into late afternoon, and then basically a little somewhat of a cup into the close. Definitely a win for the bulls today, bouncing at the ADMA. NASDAQ 100 looked even more precarious at the open with its bounce lower, but same situation. It made a low early, and then look how quick, this is what I was saying about how it got stronger as the day went along. Compare this pullback. This is a cup with a breakout, and then a high handle that pulled back just to where we opened. Compare that to the S&P 500, which formed the cup, barely made a higher high, and then the pullback went halfway into the cup. This is what gave us a heads up early that money might be flowing into the big FANG type stocks, and that's what happened the rest of the day, and it ended up being the leading index on the day. So you can see that pullback, nice day, and the best part about it was undercut and reclaim the ultra short term moving average, and also got back above this one of this key fib levels that we've been talking about at 315.59. It's a major level, uh, indicative of a pullback versus the entire COVID run. And we've been spending a lot of time around this area. You can see 313.68 being the pivot on this flat base. We got above, broke down, didn't break down, pulled back, undercut and held the ADMA, undercut and held the ADMA again. So for the second time, right where it needed to. So this makes today's lows critical, and it makes the uptrending 21-day moving average even more critical. That's coming up to meet the pivot around the middle of next week. Let's go to the Dow, which has been reinvigorated from a relative strength standpoint, not today, but this week. And starting last week, you can see nice strong move above all the key moving averages. The 21 is headed up to break up through the 50 next week. Nice gentle pullback off of its high on Monday. Again, money flowing into the defensive large caps in the Dow, not all of them, as certainly financials, some industrials, and real estate continues to lag. There's no real estate in the Dow, however. Onward to mid caps. Second close below all three of the moving averages, tight range, trying to put in a bottom. And then let's go to small caps, IWM. Finished slightly positive, another tight range. In fact, an inside day, that's a positive, and banks put in some relative strength today, but again, below all the moving averages. And this is the laggard mid cap, small cap, and those aforementioned sectors certainly dragging on the indexes. So here's the dollar. Tight range today on the dollar, finished higher, actually gapped higher, pulled back to negative, a little bit of strength into the close. So uh, not much news on the dollar, continues to decline below. The ADMA, note the hookup from oversold. If we see some strength in the dollar next week and it comes above here, we know that it's been a inverse correlation with precious metals and precious metal stocks. We'll have to see what happens with the indexes, as the correlation hasn't been there as much lately. The VIX continues making, and now this closed the week at lower lows. Uh, very, mildly concerning. This is kind of the complacency area that has marked tops. But with it being below, that indicates minor volatility. We're oversold on it. So again, we are kind of set up for some both positive and negative on the market next week. For now, we bounced where we needed to, but I much rather would have preferred a bounce with the VIX coming off of a higher level, and the dollar coming off of a higher level. But that's not, we don't get the market we want, we get the market we have, and we react accordingly. Let's move on to bonds. The broad bond index just down slightly. Bonds trading in a very tight range today. There's the broad bond index. Here's corporates. TLT, the only one that made any sort of a move, a higher high on up 0.26%. Let's go to yields. 10-year, the TYX making a lower low. I'm sorry, that's the 30-year making a lower low. Uh, and the TNX, which is the 10-year, just basically flat on the day. We're in the equivalent of TLT. We'll take a look at that chart when we go through the 21 over 21. We're in the leveraged TLT. So let's see, let's move on to precious metals here. Gold with a mild pullback today, 0.71%. Gold stocks making basically 3 straight closes in the same area, consolidating after a nice run. And silver down 0.22, gentle pullback after a big move up on Tuesday. So those are all the, well, no, Bitcoin, one more, BITO, down 1%, trading tightly for 4 straight days. So those are the major indexes that we check in every video. Reminder, the market closed on Friday. You can pause this to read through it in detail. I'll hit the highlights. The news before the open, jobless claims rose versus expected. So again, that's more weak economic data. And the priors were revised higher. Tomorrow, the NFP report comes out, and the market's closed, so that's interesting. Won't be able to react to it until Monday, but I will be keeping an eye on it. Not that I could do anything about it. Kind of weird that the federal government's closed, but they're putting out, one of the departments of the federal government is putting out a major report, but nothing the government does makes sense. The day count, up 6 out of 9 with 2 consolidation, now up 7 out of 10 with today's bounce. This really refers obviously to the S&P 500 and the NASDAQ. 8 EMA and 21 EMA are 10th close above those moving averages. Nothing like that going on for mid caps and small caps. It truly is a market where you've got to be select with what you get involved in. FOMC on May 3rd, basically a 50-50 split now as to whether or not, or as to whether we go with no raise or a 25 basis point raise. Expectations remain positive as long as those 2 major indexes are above the 21-day moving average. We were confirmed there. We did the undercut and recover of support resistance areas today. So that's a positive. Here's the intraday action. Here are the sectors that underperformed and outperformed. And as far as the portfolio went, there was a fiber optic company that reduced their guidance before the open, and that hit all of the networking type stocks. And ANET was one that we held a 2% position on. We had 15% gains on it from a couple weeks back, and on a remaining 1% position, and a recent position that was down 2 to 3%. When we gap below the 21, we sold that early. And then we bought RMBS when it pulled back. This has been one of the strongest sectors. I'm sorry, one of the strongest stocks. This has really come out of nowhere after forming a nice base and breaking out on above average volume the same day that Micron reported its results. And we bought Rambus today at 2% position, basically taking the place of ANET. And then when the Qs undercut and reclaimed their ADMA, we bought 5% QLD. So the net impact to the portfolio was from a 0.9% adjusted beta to 1.09%. Bottom line for the day, S&P and NASDAQ bounce off support, leaders bent, but not broken. Let's get to that leaders list now. And we'll start off with what got booted out. And these are kind of telling. There were, first let's show the SOX, because this kind of puts it in perspective. We already saw what the NASDAQ 100 looked like. Here's the SOX. This often leads the NASDAQ 100, but it's lagging. This is the second touch of the 50-day moving average. Remember, the Qs got underneath their 8, reclaimed it, didn't touch the 21, but semiconductors not only have 2 closes now below the 21, but it undercut and closed right above the 50-day moving average. Good risk reward here for a long off the 50-day always, but Uh, there are absolutely some semiconductors and semiconductor equipment companies in particular whose charts broke down this week. Let's take a look at Akamai. No, not Akamai. That was already weak. That's a software stock. AMAT is what I'm thinking of. So there's Applied Materials uh, breaking down the last 3 days below the 50-day moving average. LSCC, Lattice Semiconductor, down 4 straight days, closing below the 21. KLA 10 Core, three straight down days. So where these have gone from being some of the leading stocks to not acting as well, and two semiconductor stocks that got booted out of the 2121 list. ACLS sitting on the 50-day moving average, down 5 straight days, losing relative strength. The main thing is that these are losing relative strength, even the ones that are holding up okay. So it's just the best of the best that we're involved in now, that being NVIDIA and adding Rambus today, and also stopped out of ALGM. Two closes below the 21, down 4 straight days, losing relative strength. This relative strength line, even some that are still in the 21 over 21 list, is a concern for some of the leading stocks. And this again reflects the sector rotation that we've been talking about all week. Third stock that got cut, AI. I went through a detailed explanation of the worst trade we've made at Revere in quite a while, with the breakout, the false breakout, the short seller that put out a report pre-market and the reaction to it over the last 2 days, and where we got stopped out. The net result is about a 0.51%, so a half of a percent hit to the entire portfolio. So if you had 100,000, just this loss brings you to 99,500. That's recoverable. It's not uh, ideal by any stretch of the imagination. There were some mistakes made in there, and hindsight 2020, I would have done things different, of course. But I break it down in detail on the podcast, which is already out on YouTube, and then email will go out sometime in the next couple of days on this. But this this just was not a good experience for this, and I'm glad to see the week end and to put this behind us. Another stock beginning with an A that's a semiconductor that broke the 21 is AMD. And this, again, note the relative strength flagging. Nothing really wrong with the chart, but a week and a half ago, semiconductors, some of them started underperforming. We discussed it a lot in house, the charts. I didn't want to overreact by selling some things that may have just been taking a break. But the last couple of days with the rotation, remember, semiconductors are considered cyclicals. And if you're going into recession, those are the types of stocks that get hit with the recession. So not everything rosy with semiconductors, and apparently it caught up to AMD this week. So that also got struck out. Another stock beginning with an A that we got stopped out on. ANET this week closed basically right below it, but it's another situation. And then that overhang with Lumentum, LITE is the ticker, and Ciena, fiber optic slash networking stocks, those all got hit today. And it's rotation out of a lot of tech and into safer names. And ANET wasn't spared either. And neither was First Solar that we got stopped out on this week. Basically closed right again below the 21, but in another look here at the relative strength. A lot of these stocks are making relative strength new lows before price are. That indicates that strength is flowing into other sectors, not the sector that these stocks remain in. And then number 7, 2, 3, 4, 5, 6, 7 was Tesla, failed breakout, 4 straight down days below not only the 21, but the 50-day moving average. I know all about the story with Tesla. Uh, and relative weakness very much over the last 4 days with this. Love the stock. The fact that it's under the 200-day moving average, I kind of had one foot out the door while we were owning it, knowing that we were coming into that overhead support. But when you break out of a nicely formed cup with handle and you have leadership potential and good fundamentals, we get involved. It didn't work out. We got out for a mild loss in Tesla, and that's the 7th one that got booted today. So let's go to the 7 that were added and the survivors. And we're going to start off This is going to have a little bit more of a lower volatility bent in some of these names, not necessarily SEA, which since its earnings report has rode the ADMA beautifully until today, but still above the 21. Internet retail out of Singapore. FedEx announced a reorg that was well received yesterday, and that's a follow up to its most recent earnings report. So normally transports get hit in a recession. This is something we want to keep an eye on. Everything that's in here doesn't necessarily mean that it's at the top of our buy list, but we keep it on here to keep a very close eye on some of the bellwethers that represent different industries or sectors that we want to keep a close eye on because there's something developing with them. FedEx, for now, this looks fantastic. Next up, Mondelez. We don't normally have food stocks in here, but look at the relative strength and the price action on this. Breaking out, any tech stock that broke out this week failed. Not Mondelez following through to the upside. Not great numbers, obviously. It's not a growth stock. But the relative strength is there, the price action is there. And again, it's a way to keep a close eye on a stock that's key to an industry where money appears to be flowing into. Next up, GDX. We own GLD. GDX. I mean, it just has to be in here. I should have had it in last week, and I really, frankly, never should have taken it out. My expectation was that when growth stocks started acting better, that gold would underperform, but uh, that's not what happened. So I'm wrong all the time. It's okay to be wrong. As long as you're wrong small and you don't stubbornly stick with things. But gold stocks have been very clearly acting well, and Connor talked about them on the podcast this week also. ExxonMobil, another sector that has not been acting well is oils. Uh, Over the weekend, last weekend, we got the surprise OPEC cut, and Exxon held up like a champ all week, going sideways after the gap up. So this is another case of a new sector being added to the 2121 list that we want to keep our eye on. A lot of these oil stocks are broken, but the ones that are holding up well, we certainly want to keep an eye on them. Rambus, this is the stock that we bought today and added to the 21 over 21 list. Here's the 2-day big volume breakout after a nice tight flat base, and then a gentle 5-day pullback into the 8 EMA. So this is a semiconductor stock that didn't have a failed breakout. We kept our eye on this when we got rid of ANET. We added this, and to keep a close eye on the semiconductors. I don't think that the market, that the Nasdaq can go substantially higher without them. It'll be a drag on the Nasdaq. The FANG stocks can absolutely take the Nasdaq higher, and that's why we bought QLD today, because the top 7 in there look fantastic, and they're safe with solid balance sheets. So that's where the money's flowing now. TLT, we added this. We own TMF. Uh, this is, recall this false breakout in rates that happened on March 2nd. That is the equivalent of a false breakdown in the price of the TLT. From failed moves come fast moves in the opposite direction, and that's what we're seeing here. We got the quick move up. We went sideways for 2 weeks and then broke out this week. A little bit of a fear trade with the recession and the expectation that the Fed is going to stop raising interest rates. So obviously something, we discuss this every day in the video. So Lululemon continues to just go sideways, not showing relative weakness. If it's maybe some of the higher priced apparel companies are holding up very well, maybe it's going to be a middle class recession and not a recession of premium brands, but Lulu is holding up strong. Elf continues to just trudge its way higher. ON, we got stopped on this on the break above 30 yesterday. This was the power gap up. We booked some nice gains in this. It bounced above the 21 today. This is still at the top of our list to re-entry according to the parameters of that gap up webinar that we attended a couple of weeks ago, and really quantified the way the leading gap stocks should behave. CDNS continues to hold strong, bouncing at the 21. These are all carryovers. PagerDuty weakness. undercut, reclaim the 21. This is kind of what I was talking about. Some of these stocks undercutting, but by the end of the day, reclaiming the 21 to stay on the list. Wing was another one, undercut but reclaimed. Meta continues to just be strong, riding the ADMA higher, big component in the QLD. GE Healthcare, 5 days of a pullback after 2 strong days of a breakout above this 78 level. A low risk entry here, and maybe I'll finally be able to get involved with this stock after this nice base that it formed. It's not showing in here. It's just like a day or two shy of a flat base, but pull back to the top of this level around 78 is a good spot to consider an entry. Axon continues to hold up, bouncing off of the 21. 4 undercut, reclaim the 21 this week. Lantheus going tightly above or tightly higher along the ADMA. Palo Alto, another one that undercut and reclaimed. We own this. Fortinet is actually acting better than this after Palo Alto took the torch of the leadership of cyber. OKTA and Fortinet were numbers 2 and 3. Okta has fallen by the wayside. Fortinet is really the leader right now, but we did have this 4 days of well below average volume, undercut and reclaim of the ADMA. Another one. I mean, there's easily 24 in leading stocks that happened today. Nvidia hasn't even touched the 21, closed right on the ADMA, continues to be a big leader. GE, one of the industrials, this is the number 1 stock. It's ranked number 1, which means it's been on the list the longest, just ahead of Nvidia. And GE has been a stellar performer. It hit 20% above its pivot, now pulling back. The pullback has been on above average volume, as this is an industrial diversified company. We'll see how this continues to act. It might be indicative of some of the other industrials, and we'll see if GE can hold up. And that's going to wrap it. As always, love to hear from you. Remember, we're active managers, avoiding bear markets. It's been a struggle this year. It was a struggle last year. But we strive every day to stay on the right side of the market and avoid big losses. Sometimes some of our stops keep us from getting the gains that we need. We're always looking to make tweaks to our system, increase or decrease certain sector allocations based on what's going on. But avoiding big bear markets and major chunks to your portfolio is our number 1 job here at Revere, and then participate in the uptrends when the market gets healthy again. And if you're interested in this approach, reach out to me, Don at revereasset.com, or my partner, Dan Stewart. He handles onboarding, Dan at revereasset.com, or the phone is 855-REAL-WEALTH. That's 855-732-5932. And with that, I will wrap up the week ending April 6th. Remember, it's not how much you make in the markets, it's how much of that you can keep. Thanks for listening, and enjoy your long weekend. This is Don Vandenbord with RevereAsset.com, reminding you just the facts coming here from Revere. It's not always what you want to hear, but it's what you need to hear. Thanks for listening, and have a great weekend.